Welcome to this video on the top 10 frequent questions people ask with DCF income payments. First, the simple one. What are DCF income payments? DCF income payments are discounted cash flows. They are payments backed by annuities issued in conjunction with structured settlements and paid by top-rated insurance carriers. Buyers become the new payee of fixed in-force payment streams that are sold at a discount by sellers. The discount by the seller means a higher yield for you as a buyer. Where do DCF income payments come from? Well, times change and people decide to sell their payments. You've probably heard of factoring companies like J.G. Wentworth or Peachtree. These are the originating companies that originate transactions with sellers. We buy from factoring companies all over the country and do all the legal review to resell through a nationwide network of advisors. Our purchasers become the new payee of these existing and in-force payment streams that are backed by annuities from top-rated carriers. The yields are higher for DCF income payments because people sell their payments at a discount. The discount taken by the seller means a higher yield for you as a buyer. The discount varies depending on the case, but typically yields are 1 to 3% higher than comparable assets like CDs or fixed annuities. With a DCF income payment, the lower purchase price means a higher rate of return. Compare a DCF payment paying 240 monthly payments of $1,000 a month to a newly issued annuity with the same payment stream. New issue annuities today would cost about $193,930 for that payment stream, which represents a 2.236% rate of return. Whereas a DCF income payment for 240 monthly payments of $1,000 will cost approximately $173,486 at a 3.5% interest. The higher yield represents a 10.54% savings, over $20,000 lower cost for the DCF income payment when compared to a new issue annuity. People also ask, are DCF income payments safe? The transfer of payment streams is a rigorous and court-ordered procedure adopted in 49 and 50 states. Every transfer must be court-approved and explicitly conforms with IRS Section 5891. Every transaction is thoroughly reviewed by outside legal counsel, and we supply full and complete documentation of all the contracts and assignments of a payment stream before you send even 1 penny in to purchase a payment stream. In addition, DCF income payments are backed by annuities issued by some of the strongest carriers in the world. A recent analysis of payment streams processed by DCF Exchange showed MetLife at the top of the heap with nearly 20% of the payments, followed closely by New York Life, John Hancock, Berkshire Hathaway, and other top A-rated carriers. With DCF income payments, you're dealing with the best of financial institutions. People also ask if they need to be over 59 and a half years to buy a DCF income payment, and the answer to that is no. There are no buyer age restrictions, and there's no penalty tax on income payments taken to buyers who are younger than 59 and a half. Why, you may ask? With DCF income payments, you are buying an existing payment stream backed by an annuity. You're not buying the annuity itself. The annuity itself does not transact, just the right to receive the payments. Can you use your IRA to buy? Yes, of course. Many of our purchasers are using qualified funds, and you would indicate right on the purchase order if you are buying with a qualified account or non-qualified. You'd open a self-directed IRA prior to purchasing a case, and our self-directed IRA custodian is GoldStar Trust. They are by far the best in the business. Look for some other videos on this site about GoldStar Trust and how to open a GoldStar Trust IRA account. Once you open a GoldStar Trust IRA account, you would transfer funds from your current custodian into the GoldStar account, but we usually wait until the case is approved in the court-ordered transaction process before initiating transfers. GoldStar is the best IRA custodian because they are simple, they're easy, they're the lowest cost, they have excellent customer service. It costs just $25 to open an account and $65 a year to keep one open, which is a fraction of the cost of other self-directed IRA custodians. GoldStar plays 3 roles for DCF Exchange: as the payment servicer, the escrow agent, and as our self-directed IRA custodian of choice. People also ask, what happens if I die before the end of a payment stream? DCF payments are fixed term payments and they pay to you or your heirs. There's no loss to an insurance company if you die. Be aware of probate issues in your state though. Many people use a trust when buying in order to ensure that the payment streams go to their heirs seamlessly. Talk to your estate planner and purchase accordingly. People also ask, can I buy payments for someone else, such as kids or grandkids? And of course, payments will be made payable as you specify on the purchase order. Some people buy for kids and their grandkids, some buy for their church or for a charity, or they name these entities in their beneficiary, or if they want to purchase for a family trust or for other needs. It's best to know exactly what you're looking for before looking at inventory. Getting started with DCF income payments does require you to understand what your goals are, because we have immediate start payments, deferred start payments, and lump sums that each are applicable to different sorts of financial planning needs. Whatever your situation is, DCF income payments offer a higher yield and a lower price on fixed income. People also ask about taxes. DCF income payments originate as structured settlement payment streams backed by annuities. Structured settlements are tax-free to the original annuitant, but that doesn't mean they're tax-free to you. You won't get a 1099 from an insurance carrier, but you and your tax preparer will need to pay taxes on the taxable interest income from each payment. We have tax guidance from a major accounting firm enclosed in each of our closing books, as well as summarized on the website. DCF income payments, in a nutshell, are receivables. Each payment is comprised of a portion of principal and of interest, and the interest component is what is taxable income to you. People also ask if they can resell their payments later. Yes, DCF income payments can be sold or transferred to another buyer. They can also be sold back to DCF Exchange. Note that while you can resell, we don't guarantee what the price will be or how long it will take to sell a payment stream back to DCF or to someone else. The price of a payment stream varies based on the interest rate environment at the time that you would be selling it. So there isn't a specific surrender schedule with a DCF payment stream. You should consider these payments to be illiquid and plan on holding them to term. Finally, just exactly who is DCF Exchange? DCF Exchange distributes our payment streams through a nationwide network of financial advisors. The principals are experienced in the Main Street annuity market and on Wall Street with interest rates trading experience. We turn over millions of dollars a month in these payment streams using the same procedures as large factoring companies like J.G. Wentworth, but we sell payment streams direct to investors through our advisor partners. Contact your advisor to get started with DCF income payments today.